Welcome to ETF Leaders, powered by the New York Stock Exchange. Joining me today is Steve Deroian. He is the U.S. co-head of retail product at John Hancock. Steve, always great to see you. Thanks for joining me today.
Thank you, Judy. Always great to see you as well.
Thank you. So now, Steve, tell me, what are the biggest challenges in 2022 and how can investors manage their risk?
Well, I'm sure you've been hearing this a lot if you've been asking this question, but we think rising rates obviously is one, and inflation is probably two. As we think about rates, I think the thing that I always think back to is you just never know. It's whether I think today, this morning, the street says nine hikes in this year. It seems like a lot. Maybe that's going to be where it lands. Maybe not. But we've been in these positions before over the last 5, 6, 7 years where rates are going up, and somehow something happens and it doesn't always happen. So it certainly seems more certain now than it's been in quite a long time. So I think that's the challenge always is, we don't know where the market's going to go, and we don't know what's going to happen from a geopolitical perspective that could impact that, right? If we've learned anything over the last 2 years, we should know that. Yeah. So I think as you think about that as an advisor and an investor, how do you deal with this uncertainty? Well, I think you can deal with it a couple of ways. One is, it's the old adage, you stay the course to some degree. And you find a way to be sort of in the core, in the middle of where you want to live as an investor. And then you find ways to augment and to really, from a satellite perspective, evolve what you're doing and protect yourself as best you can. So I think that's probably the best way to think about it. And as an advisor, when you're planning your portfolios, I think it's important in the fixed income space to be aware of what's happening with rates, obviously. And what we found when we talk to advisors is they really need to come up with some additional non-traditional ways of gaining that income. And whether it's looking for protection from a duration perspective, obviously, and that can happen in a couple of different ways. It can happen in things like floating rate, or it can happen in less traditional areas like having a focus on mortgage-backed securities or having a focus on preferreds, two areas that we recently launched some ETFs in that we think are just fortunate in terms of time frame. We don't spend too much time worrying about the time in which we launch things because, as I just said, things change so rapidly you never know. What we really try to focus on as a firm is really understanding what the client's needs are, and in this environment, we do believe that some non-traditional forms of income are going to be really, really important right now. And as time goes on and people get more comfortable with that, I think what you'll see is they'll just become more comfortable with non-traditional forms of income.
So tell me, what's your big area of focus for this year?
So, as I mentioned, we've launched a couple new products in the fixed income space. One of the things is, I think Judy, we're a manager of managers at John Hancock. So we do try to go out and look for best of breeds. And what we've done in 2021 was launch 3 new products. One focused on the corporate bond market, one focused on the mortgage backs, and one focused on preferreds. All 3 of those we think represent opportunities for us to talk to advisors about this alternative, or I would say more granular view of the fixed income market. I think generally most of us who've been in this business grew up more on the equity side. They tend to be a little bit more comfortable, in the news, talking about the markets. And I think that people do get a little intimidated by the fixed income market, and they have a tendency to find single solutions, single fund solutions. And we think that is something that's going to change. We think that more and more people are getting more and more aware of these non-traditional forms of income. We think there's an opportunity for us to deliver on two promises that we really have. One is finding the best managers, but 2 is really delivering in an active form. And in the ETF wrapper, we believe that the active management can succeed and has proven that it's already succeeded with some of our competitors in the space in general. And we're excited to bring the tax-efficient wrapper of an ETF into the actively managed fixed income space. So that's one of our big focal points on fixed income side, and then on the equity side, we continue to focus on our mid-cap space. We believe that mid-caps have they're sort of in this sweet spot where they really do a nice job of protecting against some of the volatility that exists in small cap, but give you the real growth potential that maybe you might not be able to see in the large cap space today. So in our current lineup, that's what we look for, and I think we'll see us in 2022 looking more towards equity income as a solution. That may come along in 2022 and beyond, because we do think that the aging population is really going to need more income, and we want to make sure that we deliver products in an actively managed way, that they're really getting the best of what we have to offer, and something that can really match what their long-term needs are, because that's what we're really focused on day in and day out, is our shareholders and making sure that we deliver to them on our promises.
All right. Well, Steve, always great to talk with you.
Good to see you too, Judy.
And that was ETF Leaders, powered by the New York Stock Exchange.